Thanks for tuning in this lovely Friday evening. The Senate has gone home, but we're still here. Today's headlines. Tech stocks are on the rise again. We talk Amazon and the week ahead with Nick Reece at Merck Investments. Operation Warp Speed closes its biggest deal yet. The US will buy 100 million vaccine doses from 2 European drug companies. Tough times for the oil industry. Exxon and Chevron lose billions of dollars in the second quarter. And Chinese buyers of microchips are ramping up their imports through Hong Kong. US sanctions on the region could make it harder to get critical technology. It's big tech day again. Amazon, Apple and Facebook stocks soaring today after their positive earnings reports. Apple shares are up 10% to an all-time high after their sales grew by 11%. People are investing in tech while they work and study from home. Amazon stocks are up almost 4%. Nick Reece has some analysis on that shortly. Some details in the energy industry later as well. All in all, for the day, the Dow gained about 115 points or 0.44%. The S&P 500 is up almost 25 points or 0.77%. And the Nasdaq continues its rally, up 157 points or 1.49%. And just before the closing bell, we talked Amazon and the week ahead with Nick Reece over at Merck Investments. Nick, great to have you on as always.
Thanks, Paul. Good to be with you.
Nick, a lot of the big tech stocks are rallying again today. Do you think that investors were surprised by the earnings reports?
Well, judging by the market reaction, it seems to be an upside surprise looking at where some of these big tech stocks are trading after earnings yesterday. And generally this week, we're seeing tech leadership reassert itself in the market, even though we've got both small caps and large cap stocks up this week. We are seeing the growth stocks outperform value stocks again.
Yeah, I know it was something we had kind of spoken about just a week or two ago. Yeah, we had an eye on it. And Nick, do investors keep an eye on anything like these hearings we had, antitrust hearings, or not really?
Yeah, I think it is a risk factor for these big tech companies, although to some extent, I think investors may rightfully shrug it off as mostly an opportunity for politicians to get their talking points and their sound bites heard, but it is something that longer term it could be a little bit of a risk factor. But I do think investors, probably rightfully so, are mostly shrugging it off and not too concerned about any major legislation that would break up the big tech companies.
And I know we had talked a little bit just before the call about Amazon's PE ratio. Maybe you can give a quick introduction to anybody at home who doesn't know. What is the significance of the PE ratio for investors, and how in the world is Amazon so big?
Sure. So the PE ratio is the price earnings ratio, and it's one of the first metrics that you learn about when you're getting introduced to the concept of stock market investing. And I think a good thought experiment, without talking about Amazon's valuation today, I think it's important to go back 5 years. And if you go back to 5 years, which would have been the middle of 2015, so after the Q2 numbers for 2015 came out, June 30th, 2015, Amazon was trading at a market cap of $200 billion, and they had 12 months trailing operating income of $1 billion. So they're trading at about a 200 PE ratio relative to that trailing operating income. This past 12 months, so fast forward 5 years, we're in the middle of 2020 and at present time, if you look at the trailing 12 months, they've generated $17 billion in operating income. And so while they were trading at 200 times earnings in 2015, they were really only trading at 12 times 5-year forward realized operating income. And when you have these growth companies, you really have to look into the future and think about what the prospects are. And stocks are really long duration assets. They're essentially perpetual securities so long as the companies remain going concerns. And with interest rates being so low in terms of the Treasury yield curve, the emphasis increasingly becomes on earnings further out into the future. And so it's really that it's a growth stock that you have these higher kind of current PE ratios, and something that investors should consider or just be aware of is that companies can grow into these valuations, and I would say that Amazon has done a good job of that in its history in the past. Now, where it goes from here, we have we don't know, and certainly past performance is no guarantee that things will continue like that for Amazon. But I would say that the market has generally gotten the Amazon story right since its IPO. It IPO'd in the middle of 1997, and for every dollar invested at IPO, it's worth over $2,100 now. It's compounded at about 40% per year. For shareholders, and that has been based on the shareholder willingness to understand the business model and the business plan and be patient with these earnings coming through. They continue to invest very heavily for the future. So Bezos, the wealthiest guy in the world, he's been an excellent capital allocator for his shareholders.
Yeah, they've definitely had an awesome year so far. And very quickly, Nick, anything you're keeping your eye on for the week coming up?
Well, we do have the jobs report next week, and we saw yesterday a little bit of a negative trend in terms of the initial and continuing claims numbers. So that's the weekly data that we get on the labor market, and then we'll get the big monthly jobs report next Friday, which will be for the month of July. They do take that survey data in the middle of the month, so that'll represent the picture as of mid-July, so a couple of weeks ago. And I think there we just want to see whether the trend of improvement in terms of the non-farm payrolls, net non-farm payrolls, and unemployment continues to improve. There are, of course, concerns for a second round of slowing, maybe a double-dip recession, some call it. And as the Fed noted this past week, the outlook for the virus and the path that the virus takes over the next 6 months is going to have a huge influence on the on the real economy. So that health variable is still very important right now.
Yeah, jobs and the virus. I think that's what key things people are looking at. Nick, I really appreciate the update. I hope you have a great weekend. Thank you.
You too. Thanks, Paul.
Mixed messages about the economic recovery today. Consumer spending in the United States increased in June, but at the same time incomes fell. This suggests that the recovery could be losing some steam.
New government data shows American consumers increased their spending by 5.6% in June, while personal income fell by 1.1%. Combined with a surge in COVID-19 cases and lackluster jobs numbers, the spending and income figures paint a picture of a U.S. economy struggling to sustain recovery momentum. Consumer spending is a major driver of the U.S. economy. It accounts for around 70% of gross domestic product, or GDP, so the solid consumer spending number is an encouraging sign. But a surge in CCP virus cases in parts of the country and Thursday's gloomy unemployment numbers suggest the recovery may be losing steam. Another 1.43 million Americans filed for unemployment last week, while the number of people already collecting jobless benefits rose by over 860,000 for the week ended July 18th. Mellon chief economist Vincent Reinhart said the pace of improvement has stalled. And the biggest mistake anyone can make is to confuse rebound for recovery. Reinhart estimates that GDP won't reach its prior peak until 2022. GDP in the second quarter fell by a record 32.9%. That's more than triple the previous record set all the way back in 1958, when the U.S. economy shrank by 10% in the second quarter in annualized terms. Most economists and long-term investors, along with the Federal Reserve Chairman Jerome Powell, have all said the economic outlook depends largely on the course of the virus.
And not great news for anybody who is struggling. The extra unemployment insurance and the ban on evictions have lapsed. And to make things worse, Congress has left for the weekend without a deal. Wish I could get off work like that. Both parties are obviously blaming each other for the delay.
Congress left Washington for the weekend with no pandemic relief deal in sight. Treasury Secretary Steven Mnuchin said they made some progress, but they're still very far apart on some issues, like the supplemental unemployment insurance. Democrats want to keep it at $600 per week. Republicans want to reduce it to $200 per week. And the Trump administration is working to change the system.
We're not going to use taxpayer money to pay people more to stay home. So we're going to transition to a UI system that is based upon wage replacement. We've talked about approximately 70% wage replacement. And we're just going through the mechanics of that.
President Trump proposed a temporary extension on the lapsed extra unemployment insurance to keep negotiations going. Democrat leaders in the House and Senate rejected it. House Speaker Nancy Pelosi said a one-week extension would be worthless without a comprehensive deal in sight. The Senate is moving forward with a plan to vote on Republican proposals next week. The Senate's August break is set to start next Friday. The House Majority Leader said the House won't be back in session next week, but members can be called back if a deal is reached and ready for a vote.
And the US government just made another vaccine deal, this time with 2 European drug companies. Washington will pay over $2 billion to make vaccines for 50 million people. It's the biggest award yet.
The US government is to pay Sanofi and GlaxoSmithKline $2.1 billion to cover vaccines for 50 million people. That works out at around $42 per person inoculated. The award is the biggest yet from Operation Warp Speed. That is the White House initiative aimed at accelerating access to vaccines against COVID-19. The new deal works out at almost the same price per treatment as the $2 billion award last week to Pfizer and BioNTech. Sanofi of France and UK-based GSK will produce 100 million doses at 2 per person. Washington has an option to purchase 500 million more at an unspecified price. They plan to start clinical trials for their treatment in September. GSK said in a statement that more than half the US funding will go into further development of the vaccine. The remainder will be used to ramp up manufacturing and deliver the finished product. Their inoculation is based on a Sanofi flu shot with a complementary drug from GSK. The new deal is the second for the product, after the UK agreed to buy 60 million doses. Earlier this week, Pfizer and Moderna began trials of their vaccines, potentially clearing the way for use by the end of the year.
And US oil producers lost billions in the second quarter. It was the first time in 40 years at least, that ExxonMobil, the United States' top oil producer, the worldwide pandemic caused demand for oil to drop and oil prices to crash.
Quarterly results are out for 2 of America's biggest energy companies, and wow, are the numbers grim. ExxonMobil reported a second quarter loss of $1.1 billion on Friday, marking the oil giant's first back-to-back money-losing quarter in at least 36 years. It was always going to be a tough quarter after a price war between Saudi Arabia and Russia in March sent oil prices crashing. Throw in stay-at-home orders around the globe that grounded driving to a halt, freezing gasoline demand, and you have the makings of a catastrophe for a major oil company like ExxonMobil. The oil giant said it has no other choice but to review operations and promised, quote, significant cost cuts. Quarterly results were even worse at Chevron, which lost $8.3 billion last quarter. Not only did it get slammed by the price war and the economic shutdown like all of its peers, it also had to take a write-down for expenses tied to letting go of up to 6,700 employees, as well as its forced exit from Venezuela. It had been the last U.S. company with operations there, but the Trump administration ordered it to stop doing business by the end of the year amid U.S. sanctions designed to oust the government of President Nicolas Maduro. With global economies running deep in the red and only gradual recoveries expected, a near-term rebound in business is unlikely for either Chevron or Exxon.
And the pandemic hit the Eurozone hard last quarter, the biggest drop in the zone's history, in fact. All 19 countries have been affected, in some cases wiping out decades of economic growth.
The 19 Eurozone countries experienced a devastating 12% shrink in their economies from April to June compared to the previous quarter. It's the biggest drop recorded since the formation of the zone. Hardest hit were France, Italy, Spain and Portugal. Spain had the worst drop, falling 18.5%. One economics professor says Spain faces a long and uncertain climb back to pre-virus levels.
The drop in GDP this year will not be recuperated during 2020 and not until 2022, until we are back at the same productivity level that we were at before the virus.
Projected recoveries could be severely hampered in the event of more CCP virus or coronavirus outbreaks, and currently some countries are experiencing increases in cases. The French government is encouraging people to spend more money to help recovery, but it's not an option for some.
In my situation, I cannot consume more. I receive unemployment benefits, and my income is effectively reduced, and I don't know how my future will be. I don't feel like spending a lot today.
In Italy's case, economists say the pandemic wiped out about 30 years of growth. European governments are countering the recession with massive stimulus measures. The European Central Bank is pumping the equivalent of about $1.3 trillion into the economy to aid recovery. This step will help keep borrowing costs low.
And the US-China dispute continues to heat up. Now the Trump administration is intensifying its economic pressure on China's Xinjiang province because of human rights abuses against Uyghurs and other ethnic minorities. The Treasury Department blacklisted a powerful Chinese company this Friday, freezing its assets and barring Americans from doing business with it. The department also sanctioned 2 party officials. They'll be banned from traveling to the US. And back at home, President Trump might soon order China's ByteDance to sell TikTok here in the United States. US officials are concerned about the app's safety and privacy measures under the company's ownership. According to media reports, Microsoft is in talks to buy the app. The US has been investigating TikTok for potential national security risks. The music video app is popular with American teens. As it gained more popularity, US officials grew more concerned that the app could be used by the Chinese regime to gain data on American citizens. Trump said that the White House is looking at a lot of alternatives for the app, and a decision could be announced very soon. And still to come, a longer wait for usual for Apple's next iPhone model. It's expected to be the company's first with 5G capabilities. And 2 Chinese nationals have been accused of spying on US vaccine research. The pair are linked to the Chinese Communist Party. That and more after the break. Apple will still be releasing its new iPhone model this year, don't worry. But the company says it'll come a few weeks later than its usual September release. The next model is expected to be Apple's first 5G capable product. It promises dramatically faster download and upload speeds. It follows a strong quarter for Apple, which brought in nearly $60 billion in revenue. That's over $7 billion more than expected. The delay will push the typical earnings from the new releases to the fourth quarter, but Apple says it's still expecting a strong back-to-school season. And it's been a tough year for many retailers and their employees, but one bright spot for people working at Dick's Sporting Goods is having the premium pay extended through the end of the year. Dick says that pay boost is 15% above ordinary wages. The company also announced it would follow a growing trend and close all stores on Thanksgiving. In previous years, it was open limited hours on the holiday. And China is stocking up on computer chips via Hong Kong before U.S. trade sanctions take effect on the island.
Chinese importers are buying more computing chips through Hong Kong in anticipation of U.S. sanctions on the island, which will make the trade much harder. Re-exports of semiconductors through Hong Kong to China jumped 11% in the first half of the year, compared to the same period in 2019. Re-exports, which is the export of foreign or imported goods, rose by 21% in June alone. The Hong Kong trade represents over 38% of China's total chip imports. After Beijing imposed a national security law on Hong Kong, the U.S. government revoked Hong Kong's special trading status, making future computer chip purchases more difficult for Chinese companies like Huawei, Xiaomi, or Lenovo. The Hong Kong Electronics and Technologies Association estimates there are 300 firms that specialize in the trade. It says trading companies in Hong Kong are thinking of setting up new offices in India, Vietnam, and Cambodia to continue selling to Chinese customers, but relocation will be costly. Economists say the new rules could cause a supply blockage for China, resulting in higher transaction costs for the Chinese tech industry.
2 hackers linked to the Chinese Communist Party are accused of targeting multiple American companies. One target is a leading virus vaccine developer.
Last week, the U.S. Justice Department made public an indictment of 2 Chinese nationals accused of spying on the U.S. One of their targets was biotech company Moderna. Moderna is a leading vaccine research developer for the CCP virus. The hackers, which are linked to the Chinese Communist Party, targeted Moderna earlier this year. Moderna is based in Massachusetts. The Trump administration has high hopes that the company can produce a vaccine and is supporting its development with nearly $500 million. Moderna confirmed that they had been in contact with the FBI after the incident. Moderna spokesman said that the company remains highly vigilant to potential cybersecurity threats. They maintain multiple teams to protect valuable information. The FBI and the U.S. Department of Health and Human Services declined to disclose the identities of other U.S. companies also targeted by the Chinese hackers.
And still to come, entrepreneurs get creative and shake up their business models. Find out how they're adapting to the new normal when we return. Many small businesses are trying to stay afloat during the pandemic, and some entrepreneurs have been forced to shake up their business models. They hope it'll be enough to survive.
Good morning, everybody. Hey, MJ. Hey, Molly. Hi, Dana.
An early morning workout.
In 3, 2, 1. Separate your legs. Don't leave the floor.
In the new abnormal for Studio Metamorphosis.
Beautiful. Go, Katie.
All virtual, facing a seemingly never-ending contagion.
It just, the whole prospect of having a business in this climate seems impossible.
5 months ago, owners Jen Yates and Alex Hartunian closed their 3 Los Angeles studios. Then, a lifeline.
We heard back from the PPP. We're going to get some money for you guys.
Yay! Yay! What are we doing with this thing?
Now $150,000 behind in rent, they're selling off equipment to stay afloat. Cleared rooms for a virtual future and California's reopening.
When we reopened, we realized, oh my God, like, no one's coming really because people are scared.
Okay, let's regroup. We are going to have to rebuild. We know that. Which locations are we going to have to close?
More business closures is what Congress hopes the latest stimulus proposal prevents.
Let's make sure 6 feet there.
But Tom Sopit isn't waiting on lawmakers anymore.
We realized at some point we needed to really innovate and just keep moving. We didn't want to keep stopping and let the virus control the narrative.
The path here has been painful.
It was a nice, dirty old parking lot, and we turned it into this, basically we created a paradise in the middle of the pandemic.
Re-innovating his entire restaurant outside, opening this weekend.
Lift. Good, take a deep breath.
Small businesses employ 60 million Americans, about half of the private workforce.
Do not drop out of this.
That's what's at stake in the next stimulus package, say these owners.
One, you made it. Whew.
Even more than just their brick and mortar shops.
That's the latest business updates for the week. Thanks so much for tuning in. Hope you have a great weekend, and we'll see you on Monday.